Weekly stock market update. Here we go. And if you've not already looked at it, look at the Great Investments Program while you're at it. Okay, now, everything on a price earnings basis is expensive. For those of you who don't know what price earnings is, it's imagine there's a business called Amazon and they make $1 in profit every year. And you go along to them and say, I'll buy your business. And they say, well, we want $115 for you to buy it. And you say, you only make $1 a year in profit. You want $115 for it? That's price earnings ratio. You'll quickly see why it's not phenomenal as a way of valuing companies. But if you were to use that, it's the most popular measure, then it would suggest only banks and energy companies are undervalued and everything else is expensive. Don't forget, when we look at analyzing companies, we don't just look at the charts I'm going to show you or just one measure like value. We'll look at valuation, revenue growth, profit growth. Another word for profits is earnings. Dividend yields, because we know these things are important. Cash return on capital invested, we know that data from the banks tells us that's important. Momentum, we know that's important, but it's not the only thing. You can have companies which are undervalued because they're rubbish and never go up, or companies which are overvalued and continue going up because momentum's more important. And how do you find all of that out? Well, you can't ever find anything out with certainty. All you can do is tick boxes of what's relevant, and you weigh things which you know from research is more important, like valuation. You weigh those more heavily than things you know which are less important but are to be considered, like dividend yields. Okay? Now, Microsoft. Well, what was the week like? Well, you can see a lot of the big name companies had a bloody good week, as you can see. Utilities, energy companies, which we've said are undervalued, banks, but that's only a week. Let's not read too much into a week. A week is a long time in the markets and in politics. How do things look then if we take a different measure of valuation, price earnings growth, which is share price compared to growth in profitability? And if you do that, everything's still bloody expensive. So what kind of year has it been for everyone so far? Well, Nasdaq's up 41%, the S&P 500 17. If you were cherry picking, you should have done better, presumably because you had more stringent criteria and didn't pick poorly performing companies. Those on my Great Investments Program and their pensions, with some of them who've been on since before January, because most of the gains came from January until about July. Some of those have doubled their returns, or were slightly more risk loving and had more Nasdaq stocks. Others have got about a 30% return, who are more broadly based and were cherry picking out of, say, the S&P 500. What do we think is going to happen of the devil? Speaking of the S&P 500, does it continue falling, or as it did a few weeks ago, or does this rise in more recent times continue along that upward trend? Now, we know there's issues with cost of living, interest rates, potential war, etc., etc. However, if we just look at the price charts at the moment, then what do we find? We find there's a support line. I'm not particularly worried. You see this monthly momentum measure. I don't use it the way the textbooks do. It'll probably continue going in that kind of manner. So one is not concerned, even though September tends to be not a particularly good month for it. FTSE 100, yeah, it had a bit of a peak up, but don't read too much into it. You really need this to cross over, which again is the measure of momentum. And you might say, well, no, surely it's an undervalued index and blah, blah, blah. Well, no, there's a lot on the macro front which wouldn't make you positive, but certainly I think it's not going to do that. I suspect it's going to go closer there. So I'm not bullish on that. Apple, China, all those issues, well, whatever the reasons are, let's not ex post facto try and make up excuses for what the price is doing. The banks like it. September tends to be a bad month. More importantly for me, if we zoom in to the momentum indicator on the monthly basis, you see that actually the MACD is not below, or the blue line, the dotted blue line, the monthly MACD is not below the dotted yellow, which is its own moving average. And that's a critical factor for me. So I'm not particularly worried. And if it does fall below that support, let's say it goes down as low as this, more likely what will happen is it'll bounce off, or it'll do this. It'll do one of those two things. I do not think it's about to do that, okay, or even go back to this level as things stand. If it did, I might buy some more. So we are. Well, this is what the analysts think. Okay, they think if the current price goes to what the average of what they all think, then we'll get to a 14% return. All right, there's your alphabet. Okay, there's your alphabet. And that's the direction over there. And I think it'll probably do something like that. Okay. And there's your return there. So that's your alphabet. What are we doing in terms of directions? For Microsoft, well, I'm not particularly worried again. I think we'll probably end up going over there. This is now starting to bounce up. The stochastic tends to be a bit more sensitive. So gives early warning systems. So I think we'll probably end up in that direction. Would I buy some more today? Yeah, I probably would. But I'd rather put dollar cost average in, given the more broader market uncertainty. And that's pretty much the theme for things. I'd rather dollar cost average into most of these stocks than actually buy them all out today. And the reason is because there's less, I'm a bit more risk averse. Amazon, similarly, if you put a gun to my head, I'd buy it today, but I would rather with dollar cost average in just because of the worries of the broader market. Okay, so there we go, and that's the direction we're looking at. You can see what the analysts think. You can pause this at any point. That's your Amazon. There's your Disney. Would I touch it? Well, I know in the past when it's done this, it's gone up like a fireworks show at Euro Disney. But is it about to do that? I think you'd have to be very risk-loving to say you're about to get 107% again, despite what all these banks say. And the reason is I'd rather wait a bit more. I'd just wait a bit more. And you might say, no, I'm risk-loving. I'm going to go all in. Well, that's up to you. And certainly the analysts would agree with you to go all in. NVIDIA, if you're risk-averse, you would have sold already because it's overbought. If you're risk-loving, of course, you'd continue holding. You might even buy more. And if you're risk-neutral, you'd dollar cost average in. Or if you're already holding, you might say if it drops 10%, I will sell, say 10%. If it drops 20%, I will sell, say 20%. You'll work out the drop versus the sell amount based on your risk appetite. And doing it that way is better than trying to guess what's going to happen and hold more than you're comfortable with for longer than you're comfortable with. Okay, it's overbought. It's worrying. The weekly is likely to continue falling. So we might see some sales and some profit taking in this. Okay, as people certainly try and make their numbers for their bonuses as year end approaches. But September and October tend to be good for it. So there's your NVIDIA. The analysts think 40% to the upside on that one. Tesla, bumpy road, probably going to do this and continue in that direction. Certainly oversold and could have a lot more upside. So not that negative, but this time of the month, this time of the year rather, for both September and October, could see it bleeding profits. Meta, down, then up. And this is the more important one, the monthly MACD. So whilst the weekly is falling, and this is going to be educational for us, what's going to win, the weekly falling or the monthly rising? It is a battle of the momentum. And at the moment, the monthly is winning, which it tends to do more often than not. It tends to be more important. The weekly just has a short-term victory, so drops it a little bit, and then the monthly wins overall. That's where we are with that. Okay, so if now another one that I like, as you know, I will let you analyze that yourself. Answers on a postcard or email or on TikTok posts or YouTube posts as you wish as to what I think about this one, because you should know me well enough now. Don't forget, have a look at alpeshpatel.com/links. Similar with Cisco, I'll let you answer that, because you should know me well enough by now to know what I think about this one and what I said in my other broadcasts. Big clues with what I'm drawing on the screen, by the way, of course. If you haven't already, have a look at the campaignfor1million.com. If you want to join my Great Investments program, do let me know. And it's something that I created as part of my Campaign for a Million to make people better investors. Certainly, if your pension stinks and your IFA is useless, you better look at the Great Investments program and let me know. Thank you all very much. I look forward to speaking to you on Wednesday. Have a look at alpeshpatel.com/links as well.